Late last year, it seemed like the Federal Reserve had pulled off the unlikely, tamping down the highest inflation in 4 decades without triggering a recession.
Now there are new economic concerns, and Karen Caifa is in Washington to explain the Fed's latest decision on interest rates. Hey, Karen.
Hi there, Courtney and Alex. The Federal Reserve underscoring today what a lot of American consumers are feeling: uncertainty in the economy, the reason the Fed is holding interest rates steady.
The Federal Reserve staying cautious and holding interest rates steady amid growing economic uncertainty.
Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
The Fed stopped cutting interest rates back in January as signs pointed to inflation's descent stalling out and overall growth slowing, a troublesome combination. Complicating matters now, President Donald Trump's economic agenda, including the slashing of the federal workforce, shaking what's been a stable labor market, and his overhaul of trade policy, rattling consumers, businesses, and markets.
Confidence is very fragile. You can see it in the consumer sentiment surveys. You can see it among business people. Investments they plan to make, they're all pulling back.
Among the administration's moves to ramp up pressure on America's biggest trading partners, a slate of tariffs, some already implemented and some looming on imported goods from key U.S. trade partners Canada, Mexico, and China. Economists warn the policies could push inflation higher and sink consumer spending, putting the economy at risk.
Recession is a loss of faith. We lose faith that we're going to be able to hold on to our job and businesses are going to be able to sell what they produce.
And force the Fed to course correct once again.
And of course, the recession word has come up a lot in recent conversations as the stock market and other aspects of the economy have become a little bit shaky. Federal Reserve Chairman Jerome Powell was asked about that. He said that the odds of a recession have increased, but they are still relatively low. Alex and Courtney.
And Karen, what is the outlook on interest rate cuts for the remainder of the year, and how can consumers factor that into their financial plans?
Yeah, for any consumer that is planning a big purchase that would involve a loan or a mortgage, they have been waiting for these interest rates to come down. And each quarter, all 19 of the Federal Reserve officials are surveyed as to where they think interest rates will end up by the end of the year. The median result of that is a projection that they expect 2 rate cuts by the end of 2025. But a growing number of Fed officials now feel that there could be 0 cuts by the end of the year. Outside economists really believe if the Fed is going to make a move on interest rates, it's not going to come until at least June. So consumers, again, waiting for those interest rates to come down may have to wait a little bit longer. Courtney.
All right, Karen, thank you for that update.